Is this thing on? We're live. Yes, look at that. Technology. Wonderful. Welcome to the morning show, everybody. Spencer Israel, Steve Strazza. Sadly, no JC today. He'll be back tomorrow. I think he's getting ready for his trip to Disney, perhaps, which is next week. We should talk about that. JC will be at Disney next week doing some boots on the ground due diligence. I'll be out for a couple of days. So next week is going to be actually really every week from here on out. The rest of the year is going to be an abbreviated week for us on the morning show. We of course have the holidays after that, so we'll keep you in the loop about when we're doing the show, when we're not doing the show, what's going on. If you do not get the daily stock market TV email that goes out at around 8:20 in the morning, you can get that right now. I'm going to drop the link in the chat in a moment. I'll do that after the intro. And I send the schedule out every single morning. And you'll know what's happening and when it's happening. What's happening today is we have Jeff Mackey on the show. Jeff is going to tell us a few things. He's going to tell us why this week, I guess, is like the grand finale for retail for the year. Those are his words, not mine. Kenny Glick will stop by. Phil Perlman will stop by. And then that's the plan. So if you're watching us on a YouTube, I would appreciate it as always if you hit the like button. I hate saying it, but I feel obligated to. It's like I have to. So hit the like, please. If you're watching us on Twitter, hello. If you're watching us on stockmarkettv.com, also, hello. I see you. All right, let's get this show on the road here. Are we doing this? What's going on? Are we doing this? We're doing this? Okay, let's roll. Yo. What's up?
Good morning.
Good morning.
That was great, what you just did. We have great chemistry on air, you and I. You know that? People keep telling me that. And I say, I know we do. We really do. I love that about us.
People are saying.
I'm going golfing today. Can you tell?
Yeah, the hat is a giveaway.
Yeah.
And so is the shirt, frankly.
Well, this is like this is a collar. This counts as a collar.
Yeah,
right?
That counts.
Yeah, okay. Day golf. A wise man once told me, if you dress every morning, thank you for slamming my door. If you dress every morning like you're going to play golf, you just might.
That's called putting yourself in a position to succeed.
That's right.
Yeah.
We used to do a lot of weekday golf. We did away with it. We phased it out earlier this year. We're trying to bring it back. We're going to try to bring it back. So we're starting slow today. Par 3, 9 holes. Let's see how it goes. You know? Market will probably crash while we're gone.
What's that, like an hour and a half?
Probably 2. We're gonna walk. We're feeling healthy. 60 degrees out here today. Really nice.
Hey, I'll be in Florida on Thursday.
Really? I thought you were gonna say from Miami. What brings you down?
No, I gotta go see the grandpa. Have the kid meet his great grandparent. You know how it is, right?
Oh, so nice. Where are the grandparents?
He is in Lake Worth, so that's next to West Palm Beach, right next door.
I spent some time over there earlier in my life.
Where does every New Yorker go to?
I know where he's at. Yeah. Great.
Same idea.
Really?
So anyway,
I like that for you. So this will be baby's first Florida trip, first of many.
First Florida trip. I mean, hopefully not first of many, but yeah. Okay. It'll be fun. But I'll be here on Thursday, and we'll let you know about Friday. How about that? Let's talk about markets, Steve. Yesterday was a day. You know, it's funny. You know, you guys talk a lot about the banks and the bios, and I guess the builders and the Bitcoin go with that. Banks and the bios had a nice day. Maybe the builders and Bitcoin, but the first half of that device did nicely. Chips had a great day yesterday. Technology was the story, right? It was tech and it was everybody else. I guess the financials were okay, right? Relatively speaking.
Whenever we
So
go through one of these corrective waves, Spencer, tech tends to lead off the lows. So you're just seeing it again, right? Market bottomed a few weeks ago, ripped higher. You look at a relative trend between XLK, big tech, and the S&P 500, like just ramping, straight line higher. And then if you go zoom all the way out to the March and April lows, you saw the same exact thing. Then this just tends to be the case, and it's actually a bullish development. I think it's what you want to see. I think you want to see tech lead.
So that is now 11 days in a row for the XLK, right? Yeah. If yesterday was 10, today would be 11. That's how math
And
works.
there are stocks beneath the surface putting up some really impressive, win streaks in a similar fashion. I just love to see that because what that does, I mean, we talked briefly about it yesterday, it just speaks to a relentless underlying bid for whatever asset, right? If it can't have a down day, a string of a couple weeks go by and the thing's green every day, you start to say, well, where are the bears? There's just a relentless amount of demand for tech stocks right now. And it makes sense, right? Because we talk about year-end rallies and the big chase dynamic that's been in place for the past few years. This is the group that gets chased. These are the stocks. So,
well, the winners get chased. In this case, the winners happen to be technology, right?
Yeah.
And chips. Yeah, the window dressing happens now. It doesn't happen in December 26th, right? Happens
And
now.
Nvidia, speaking of tech, is going back to China. We talked about this many months ago. Do you remember when we talked about this, Spencer? We said, hey,
Yeah.
Nvidia is going to go back to China.
Yeah.
Nobody's feeling good about this. This was back in like Q1 of this year. We said, oh, Nvidia is going to go back. That's crazy. And now they finally are. This has already been priced in, though.
Really? Has it?
I think so. Yeah. This shouldn't be news to anybody. What is it? Up 1% pre-market, 2%?
Oh no, you're right. 0.5%.
Yeah.
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 If you know, you know.
Look, I think rule of thumb, any type of political restriction, geopolitical tariff thing, you can expect that to be changed a few months after the fact, regardless, right? So, yeah, NVIDIA was not allowed to export their, what is it, the H200 chips. They were not allowed to export those to China. Now they are allowed, just the U.S. gets a cut. So that's the headline there this morning. And to Steve's point,
and I'm going to be super clear about this for Robert Dunn and many other people, because this question is just pouring in lately. When Strazza sends out a, mind you, free note that says, literally, expressly says at the end, this is not a trade idea. Is it really not a trade idea? I cannot be more serious about this. It's really not. I'm not even writing some of these. How's that? Right? The analyst team guys are doing this. We are finding very interesting coiled up setups. If I send you that free note, the squeeze watch, and we say hey, Pfizer looks interesting, I might be in it, right? But rule of thumb is I'm not. It's not a trade. It's not a trade. The trades are in breakout multiplier. We talk about them every week. Those are the trades. These are not.
I think there's a difference between I feel enough conviction to put this on myself and then tell the world about it versus, hey, this is interesting. I thought you'd like to know. This is interesting. Fun fact, right? Fun fact, the stock is coiling. Didn't know if you knew that. Now you do.
And when I do like something and I'm big in a theme, I tend to like scream it from the mountain, and it does get through to free notes and stuff. But this is like a daily note. We're really just highlighting a nice coil. So it's going to be full of stuff that I'm not actually trading or not actually in.
Look, one person cannot possibly trade everything, right?
Just can't
do it. That's why I like Kenny, because Kenny's like, nah, man, I'll do like 4 or 5 stocks a day, and I'll trade those 4 or 5 stocks 4 or 5 times each. Yep. But I'm not going to trade, like there every day. If there's 20 stocks gapping up or down 10% or more, I just can't trade all that. Can't do it.
I don't know about anybody else, but my eyes can only look at one chart at a time. I could look at them very quickly. We're looking at thousands of charts a day, but I only get to look at one chart at a time. Maybe AI can fix that. We got the Google Glass coming out. Warby Parker just did a deal with Google. Maybe I can look at 5 different charts at the same time in the future, but we're not there yet.
Yeah.
What a wonderful, wonderful world it will be.
You know, speaking of the glasses, remind me to ask Jeff because he has the glasses, he has the Meta, the Ray-Bans. I want to ask him how often he records stuff out and about in public.
In the world.
Because I had a realization the other day because I was watching like a video on like YouTube or whatever, and it was like I was like, how do they record this? Oh, they're probably wearing the damn glasses because it looks like it's from someone's face, and that would make sense. So I'm just curious. I don't know anyone besides Jeff who has those glasses. So
I'm gonna get those glasses. Maybe
I talked about it a few months ago. I haven't
Yeah.
pulled the trigger yet. It takes
I haven't either.
time for me to, you know, I have to ruminate for weeks and months before I do anything in my life. So
you know, I almost got the Apple ones, the crazy expensive ones, and now in hindsight, I'm glad that I didn't, because it seems like that's not the next big thing, right? I want to buy the next big thing, Spencer.
All right. Well, the
And
Meta
it's not
Ray-Bans.
Jeffries either, Robert Dunn. I'm not in the Jeff. No.
The Meta Ray-Bans seem really cool. So let's talk to Jeff about that in a few minutes. Some other things I want to save for Jeff. I want to ask him about Home Depot. They gave some 2026 guidance this morning. I don't realize that wasn't like scheduled. It was, you know what? It's their investor day. That's what today is. I want to save like what else? Autos on earnings. That disappointed. We'll save that for Jeff. I don't know if you looked at Campbell's Soup. We have another S&P change because Kellanova got taken private a few months back, right? So ticker K is out. Ares, ARES, Ares Management, the private credit company, they're in, right? So
that's an interesting one. This is the ARES.
Yep.
So they got added to the what now?
S&P 500. The most important one.
All right. I don't think I own this. What the fuck?
You're about to. How about that?
There you go.
We all are.
So fun fact about me, I am in, I guess, the 1% of investors who does not own a single share of SPY. I don't own a single Vanguard fund. I do not own the Qs. I don't own a single sector spider. I'm just not doing that. But I try to buy the best ones.
Steve was direct indexing before he was called that. He was doing it himself manually.
I invented
400 individual stocks.
Smart data.
Yeah.
All right.
You know you can buy them all at once, right?
Steve looks more and more like a Florida man with each passing day. Thank you. Thank you.
All right.
Thank you.
I don't know if that's a compliment or not. What else did I have before we bring Kenny out?
Spencer. Yeah. So Gators Huskies tonight. Good game. UConn lost an early season ranked game, which they tend to do, and I love that setup for them. Solo ball. I mean, it's an appropriate name for him because the boy can ball. We're going to be so good this year. I think UConn's going to win another national championship.
Basketball. We're talking about basketball.
Lock in your futures bets now, dude. I hit the Bills live money line this weekend, Spencer. Big on the Bills. Live money. They were down 10 points. Where are you rolling your eyes at? Okay, you got to You got to be quick, right?
You do.
We're trading these live lines, and I'm going to take it and roll it into the Bills for the Super Bowl. What do you think about that? Because I just love Josh Allen. I wish he was on the Giants. I want his jersey. That guy is fucking awesome. So I just want the Bills to win so bad. No?
All right. I can't think of a better there are no better alternatives. There are probably many equally good or bad alternatives, but no better alternatives. So yeah, go for it. Why not?
But apparently football's fixed now. So
I don't know who the favorite is. It might be, I don't know. It might be LA at this point. I don't even know. What do we have as far as other market things? I wanted to just talk about the day that technology had. I wanted to talk about, I figured you might appreciate, the biotechs yesterday. You might appreciate the chips. what else like jumps out to us here as we just sort of take stock of things and rally into year end?
What are you buying?
I don't know.
What's in your year-end rally basket?
I don't know. I have a watch list. It's not as long as it probably should be. It should be longer. It's only got probably a half dozen tickers on it.
Are you back in the Baba?
No. I haven't actually redeployed. Like I said, I take time to do things sometimes. Sometimes I just go without thinking, and other times I take my time. For better or for worse, I take my time. So
I see you. Spencer's got the big guns ready.
No,
He's
it's not
ready to
that.
go.
It's just like, I get busy with my day, and then it's like 3:45, and I'm like, crap.
Trust me. Yeah,
start doing stuff. Right? So
sometimes I mean to buy something. I forgot to buy something. A week goes by. I think I'm in, and I say, I look at my account. I said, never bought.
Oh, there have 100% been stocks that I could have sworn that I owned. I could have sworn that I bought it, but I never did.
And the other way too, Spencer. I could have swore I stopped myself out of this.
I could have sworn I sold that. I could have sworn I sold that. Nope, I didn't sell it. Turns out, still had it. Oops, sorry.
A quick note about Latin America. I'm done with Brazil for now. I'm out. I didn't get the long-term treatment. I was under 12 months in it, unfortunately. But I'm not hanging out for like kings to fight over who's gonna run the country next. You know what I mean? That's kind of like my ticket for the door. So whatever's going on over there.
You got to know where your edge is. Steve's edge is not in South American politics.
Like too much like geopolitical risk for me is just it's a no. It's just a hard no. China is different because the geopolitical risk is so high and so known, and it's so discounted in the price. And we've been doing this forever with them that it's almost like much less of a risk than it actually is, if that makes sense, right?
Yeah.
No big secret that there's a big risk premium in China, right? So, oh well.
If everyone knows about the risk, is it really a risk?
Rick's exactly. That's well said. Rick is all bulled up on Chile, and I'm looking for other places.
When isn't Rick bulled up on some like Rick and Sam are always bulled up on some obscure, German, the German bonds or like the peso or some obscure market. Those two, they're always into something.
Yeah, I mean, look, we can dabble. Not everybody can dabble in these little country ETFs, so it's hard sometimes.
Look, I learned the hard way years ago. If you chase performance in those things, you're gonna have a bad time. Because they are going to be the best performers. These country-specific ETFs will be the best performers for a month here or a month there.
Mm-hmm.
And if you chase that, they will come crashing down. I promise you. So
like for me, I'm quick. I'm quick to hit the exits. Like I see, if you go back and look at the red candle we had in EWZ, what was it, Friday? Like that, it's something like that for me. That's all I need. I don't even need follow through. That's disgusting. Goodbye. I'm out. See you. Valet and PBR
Rick,
beautiful dividends. So we did make some good money there.
Rick, what is this chart? What is this slide to that you just dropped in here? What is that? I mean, I know what it is, but why did you? Can you bring it up?
I'm just so uninterested in Europe, like in every way, like in markets and life. Just like so uninterested in everything that happens in Europe. Really. I know.
Why?
Is
it because there's no juice there?
Dude. The whole vibe, it's just not for me.
It's because there's no juice. You want the juice.
Yeah. No juice or juice?
Juice.
Yes. There is very little beta. There's very little growth too. There are very few tech and growth companies. It's hard to get excited about anything that happens in Europe, in markets or otherwise.
All right. So the point that Rick is making with this chart is that Chile is a copper play. Yes. Okay.
European defense, really? Isn't that just the United States? Like, seriously? Fuck off, European defense.
European defense. No, wait. What's the name of that one company? Shoot.
Palantir.
No. There's a big one.
They do have a bunch, and it's been a theme. You could build a basket of European defense stocks. I know people who are really into it.
Okay. All right. Whatever. Kenny, you want to come on? You want to talk to us? You want to hang out? I think he does.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hola.
Yeah.
Right.
What
Yeah.
up, homie? Yeah.
What's going on behind you there? What's that? What does it say above Jaws? Oh, it's just is that a poster? It's just a poster. Never
Oh,
mind.
it's the Bob Marley Jaws. That's me when I was working in the record industry. Do you know that? I worked for Arista Records. Yeah.
Your life continues to amuse me and fascinate me. How many careers have you had? I'll never know. I'll never know.
I'll tell you the story. So I'm working at Arista Records and I'm wandering around. I used to do what's called sound scan. That's what all the songs that get played on the radio every week to see if the artists get paid. I'm wandering around Arista Records, and on 7th floor we had a company called Bad Boy. We owned Bad Boy, and I hear, "Hey, white kid, come here."
I just put that in the chat because I know this. I know my Diddy history. I'm here for the story.
Right. So I hear white boy, and I'm like, "Me? Yeah." So I get called into this room, and they sit me down, and next thing you know is I hear bump, 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 bump. Da, 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 da,
Wow.
da, da. So they put on the video. They put on the hypnotized video, and I'm jamming to it, right? And I'm having a good time. They're like, "Oh, you seem like you like it. All right, beat it, white boy." And Puffy was right there, and Craig Mack was right over there.
So good.
Yeah. So Craig Mack, ugliest dude I ever seen in my life.
Yeah. Big head.
And that's why he didn't make it. He was just too ugly. That dude was ugly.
Yeah.
Rest
He screwed him too.
He like Craig Mack. Yeah.
He was broke even after Flavor in Your Ear.
Yeah. But that song still rips it. I use it as my
That's
track
so
for
cool.
No Crying and Trading. But yeah, when I worked there, I did I was working on the Tony Braxton and Crash Test Dummies and Outkast. I met these guys from Outkast. That was their first album we produced. So
That is so cool.
yeah, it was a lot of fun. It's just I'm too brutally honest for the record industry. Everybody was two-faced. I mean, they would talk to a guy and they're like, "Oh man, we love you." Yeah, and then he'd walk away. "Man, we fucking hate that guy. What an ass." I'm like, "Oh, okay." I was like, and I'm just not like that. So it didn't fit my personality.
The Arista studio was right in New York City?
57th, yeah.
Wow.
57th and 6th, yeah.
Super cool. Kenny, back in the day, was writing gangster rap lyrics. Who knew?
That's right. And then that's when they fired me. So when I tried to write some lyrics for them, I'm like, no, I'm good.
You do have a very interesting history, my friend.
Yeah, but then I got trapped doing this. So now it's like 30 years later. Right? It's sick.
Somebody called me the other day. How old is Kenny? I said, I don't know.
No, nobody knows.
I just turned 71. I mean, it's crazy, right? We got 2 grandkids.
I said,
Kenny, what are we buying today? What are we buying today?
I did a little popping and dropping with core weave already. I don't know what that was all about, but ripped and it dipped. We are stagnant. I mean, the futures market yesterday was dead. Aftermarket was dead. This pre-market dead. I think everybody's sitting around waiting for the Fed. So, and I'm just trying to manifest raise interest rates, baby. Raise interest rates. I'm in cash. all my loans are secure at 3%. I'm in cash. Give me some interest rates raising.
I don't think that's in the cards. Sorry.
But I would love it. I remember when we operated at 9.5. Remember my parents were refinancing down from 12.5 to 9, and they were thrilled. And I remember when I started trading, we had these sweep accounts. We would trade, the money would go into a money market, getting 5.875%.
Yeah, that still exists, but now you get like 0.0 whatever percent.
Right. So, but this is, I'm kind of in wait and see mode right now. But the pump and dumps have been pumping and dumping. That we had another one, TGL yesterday. We had CETX. You guys,
how often do these pumpers? How often do you like go back to the well more than one day in a row? Right? Because my thought was that these are usually like 1 day stories. right?
Yeah, they usually are. That's the thing. If they break the next day, if they break the prior day high the next day, yeah, the momentum kicks in again, like that SMX. SMX was 3 days, but usually you don't even make it through the day. Usually they pump.
No, right, of course.
Yeah, and then they roll over. But that's the thing. When they come back, and one of my favorite sayings, if they don't want to die, they remain a buy. So if they get hammered, but then come back and break back over that VWAP, that triggers the buying again, and we're all over it. So, and this is the time of the season. Again, a lot of people think this December is just this month where we go straight up right into the Santa Claus rally and rip into January. It's not really like that. It's bullish, but it's kind of boring, especially when they got a Fed meeting coming. So, ultra cautious right now. The year has been awesome. You don't want to overtrade. There's zero fear of missing out. You're not missing anything right now. So I'm just looking for something to do. There's always something to do, and that's the fun part. You got the scanner. You wait for some volume to come along. It could be one of these earnings plays. I'm looking at Toll Brothers. I'm looking at CoreWeave. I'm looking at what else we got on the menu? We had a couple of I'm not looking at what was that one that SailPoint, SAIL, and you got Designer Brands, DBI, which is it's like you don't really trade these stocks too often, but because of the earnings reports, they're interesting. So DBI, again, $5 stock, already ripped the 6 back and right smack dab in the middle. Chances are we'll make a day's pay on that one.
I'll give you one. Land's End, which is down 1% this morning on their report. This thing is bumpy.
What's the symbol on Land's End?
LE.
Oh, LE.
LE, yeah.
Wow. Okay. Well, that's a nice chart. There's like 3 shares traded on it, but yeah. All right. I like it.
Oh yeah, it's 6,000 shares this morning. It's light volume, but the prints are real. It's earnings report, so those prints are real.
Yeah, I think it's just a nice day to just sit back and wait. Put some music on, and I'm meeting a lot of new friends on TikTok. What's up, TikTok? Say hi to TikTok. Hey, hang on, you're on live.
Oh God, hello.
That's my buddy Spencer right there. This guy knows what he's doing too. I surround myself with people who know what they're doing. That's how we make money. So yeah, we're crushing the streams. 6-7.
I'm amazed you actually knew what that was. I'm amazed I knew what that was. Anyway, how old are you? You're 18. All right. See you, Kenny.
Oh, all right. Take care, everybody. All right. I'll see you guys. Don't forget to show up in the chat room. And sports gambling, it is all fixed. But the one constant is the Jets always suck. Just bet the Jets against the Jets every year. You'll thank me 5 years from now because they're never going to win. AI predicts them to win the Super Bowl, by the way, in 2043. So, yeah, we'll see.
All right. Hitthebid.com. Trade with Kenny every single day. On the days when he's trading pumpers, on the days when he's trading like actual stocks and companies, doesn't matter. It's all the same. The same process works for every stock. And he really has, one simple strategy that translates to a handful, maybe a half dozen patterns. And those patterns, they work repeatedly. I've seen it enough times now to know that it's for real. Although a word of warning, if you do join with Kenny, he will make you want to quit your job. So don't quit your job just yet, but he will make you want to do it because he's having fun in there. All right, let's bring on Mr. Mackey. We got a lot of headlines, and I feel like he's had a really busy few weeks, Jeff has, between the earnings and between the Black Friday and the Cyber Monday, and everyone said retail was dead, and everyone said the consumer was dead. But no, now they're not dead. Now everyone's doing great. But are they doing great? So many cross currents, impossible to keep up with it. That's why we don't have to. That's why we have Jeff here to do it for us. So, and he sent over some funny charts today. Jeff, nice job on these charts. Very much looking forward to sharing them with the class. These are good.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Spencer, how you doing, baby?
We're good. How is your morning from a markets perspective? Because you're up at 4 a.m. mostly because you care, well, not mostly, entirely because you care about what is happening on the earnings front into the companies in your coverage universe. So how has the morning been for you, more importantly? Is it a good morning?
I'm up because I'm a little high strung, to be honest. And let's be honest, the year's over. the year's over, except for retail. We got a few retailers coming in, but for everyone else, just go home. I mean, I feel bad for Kenny. Kenny's all wound up with no place to go. No one's really waiting for the Fed. If you're trying to fix your year and it's mid-December, you've had a bad year, and just kind of come to grips with that. It's time to accept it, and it's time to go Christmas shopping. Land's End, I heard you mention them. I would love to have exciting hot takes for you. They are Land's End. There's a reason that we don't talk about them very much anymore. Home Depot came out with some news today. It would be a much bigger story if people were really kind of paying attention. They warned for this year, but they said, you know what? If housing picks up, we really expect great things for Home Depot, which is the if-then statement of all time. That's kind of, Home Depot could honestly put that in a plaque above like their corporate entrance, and they could tap it, play like a champion today at Notre Dame. And if housing improves, we're going to do much better than we have in the last 5 years is kind of what Home Depot's version of that is. Yeah, I mean, no kidding. Really? If people redo their rec rooms, Home Depot is going to benefit from that? Yeah, okay. Now, when are they going to start doing that? I'm not sure. But we do have some interesting earnings coming up. It's a time for review, it's a time for reflection, and it's a time to look forward. And we'll get to those one by one.
Can we bring up slide number 3, please? Chart Master. I want to talk about Costco. Is one of those reports. They report when? Thursday?
They report Thursday. We've got a real kind of a murderer's row coming up on Thursday. Something for everyone. We got RH, which is just this bonkers furniture company that they don't really do furniture anymore because furniture is so bad. They don't believe in Home Depot's thesis, and so they stopped selling furniture, and they're in home experiences. Great restaurants, really nice places to eat, but that doesn't pay the nut. They got to move furniture. Experiences, you can rent a yacht from Restoration Hardware. That stock has been doomed. That's the wrong chart. You got Costco and Amazon.
Wait. Yeah, slide 6.
You're looking for the downward dog.
We got it.
Which has been, yeah.
Oh, yeah. What a chart. Look at that.
When I personalize the charts this way, that's when I'm feeling it, Spencer. That's when I don't really feel like I know a chart unless I can kind of see myself in it.
AI did not draw this. You drew this.
No, it's AI did not draw that. Although ChatGPT, I did teach it how to draw Mackie stuff. It's not very good at it yet, but it's good enough to obviate my future as a cartoonist. But anyway, it's interesting that these two companies would kind of have the same charts. They're in wildly different businesses. But RH and Lulu, this has been a tough year for both of them. Just a brutal year. They've kind of flatlined. They've showed signs of life. People keep wanting to buy Lulu. They keep thinking Lulu looks cheap, but the truth is they're not going to be cheap until they can sustain their earnings. I was in Lulu last night. I go there all the time. It's got some sentimental value and also some trend following value, but this has been the year of basics. This has been the year that we started buying things that kind of, in my case, my friends used to buy. My friends and I used to go to the mall. We'd buy some Victoria's Secrets. We'd go to American Eagle Outfitters. We all had mullets. We were looking handsome. We were looking good. We were young, and it was all in front of us then. Denim, basics, flannels. I'm wearing flannel right now. They've been hot. That's come at the expense of the Lulus of the world. RH is another sort of thing that it had its moment, but right now the stuff they sell, which is super expensive, really kind of grayish furniture, it's not so red hot, and so they hold the best conference calls ever. It's just ever. It's Gary Friedman, just kind of, he's the CEO. He owns a ton of the company and he runs it strictly for himself. He just kind of builds cool things that he wants to build. Right now they've got housing developments going on in Aspen. They're building a store in France. The pretense, the amount of hubris that it takes to think the French have been sitting around for decades just waiting for the Americans to come and show them how to put furniture in their houses is awe-inspiring.
Do you happen to know what his ownership stake is?
It's close to 40%. It's you got to count the warrants. You got to count. He did a buyback, and they levered themselves up and kind of took all their cash out of it. And so he spent quite a while jamming the shorts. It was a terrific stock during COVID, and like a lot of these COVID stocks, we'll talk about one of those later on today. It's been left for dead. Now there's some of those refuse that you can pick through, but this is another one that ultimately, until people start buying furniture again, RH is going to have a hard time getting out of its own way because they just don't have the chops right now. I mean, a housing development in Aspen, that's so far afield from a furniture store, which is how they make their nut. Just as a general rule out there for you folks who like to invest in fundamentals, when your company is doing things like selling, super expensive pewter doorknobs and $25,000 couches, and then decide that you're also going to sell experiences on yachts and private jets, the chances that one individual company is going to be good at all three of those things, pretty low. Doesn't mean it's not a nice place to have lunch. I took my family there when I was in New York. It's a lovely place in the Flatiron District. It was super expensive, and we had a good time. And then we walked through the empty furniture store and just had fun doing that. But we didn't buy a lot of goods.
RH probably makes more sense as a private company, right?
Almost certainly. They probably couldn't get the financing. I mean, it's a lot of these do, but yeah, they should be taken over if they weren't so kind of levered up. It would be a buyout right now. I'm not sure what the jam thesis is. Great trading stock, or at least it has been. Lulu has been a less good trading stock, but with Lulu, they've really been given up for dead, and we saw that with Abercrombie. You and I talked about that. It went from 60 to 100 just because absolutely no one believed. I don't think they have the products people need. I think they what I suspect happened at Lulu is they lost a lot of their talent to the Vioris of the world, to the startups of the world. It was a red hot stock, and it's hard to keep people around when their stock options get that far underwater. This is a stock that was $500, and now it's not. And so it's hard to keep your talent. The talent seems to have gone over to Viore. Although what's been working at Lulu, oddly enough, cords. Like I bought corduroys at Viore. Corduroys to go with my flannel. It's I don't know why, but corduroy. It's so, but they're not a basics company, and so that's not really going to kind of bail them out. They need to do technical stuff, climbing stuff. The old CEO, my man Cliff, he has said for years that once you try to turn a company like Lulu into the Gap, he doesn't mean that in a nice way. It loses its relevance, and that's really what's happened. Is they've lost their core customer to other places, and that's a problem.
Well, they were so successful that everyone copied them. That's
right. Right. And you got to stay ahead. You can't just kind of slowly watch everyone make tights and then stick to tights. If you walk into Lulu, it looks like, it looks very much like it did 3 years ago, which is a problem if you're trying to be a cutting edge retailer that's selling to like that hot mom group. The hot moms are wearing aloes. And as we've talked about time and time again, to be a really good specialty retail store, you need a customer that you absolutely own. And for years, when Lulu was doing its best, you would see just kind of everyone in Lulu tights. That's usually the top for these things. Especially retail is where love goes to die. You don't marry these stocks forever. You get long on the upswing. I know a few companies that we talk about that are on the upswing.
Yeah, let's talk about that. Let's talk about like all right. So can we do slide 5, Rick? Can we talk about Victoria's Secret here? There we go. Yeah, so the stock crashed, right?
Absolutely crashed.
Yeah,
left for dead. And I was as surprised as anyone. It's when they were part of LB, Limited Brands. It was a Les Wexner Epstein tie-in. It was a super creepy amalgamation of companies that you really didn't want to be any part of. Suddenly, kind of out of nowhere, they regained relevance with their customer base, and they started selling undies, which was nuts. I hate the word. The word makes me cringe, But we talked about it after American Eagle reported. And what American Eagle said was, listen, our underwear business is explosive. It's doing incredible. That was a huge tell for Victoria's Secrets. We started talking about that stock when it was 42, which is where they opened the year at 42. And they came out, blew out earnings, and it's $50 a week later. They've had an enormous year, down 60% to up 22% for the year. That translates into $42 to about 14, and now it's $50 a share. Been an absolutely fantastic trader, and another one that was given up for debt, another one that your parent shopped at. Gap has been terrific that way. American Eagle's been terrific that way. Never throw away your clothing, but what you really never want to throw away are these brands that people kind of forget about, give up for dead. If they stick around, the folks at American Eagle are pretty sharp. They're pretty savvy. That was one of my favorites for the year, just because if you were able to see through the controversy, if you're an old crusty guy like me, you've seen a fake controversy or two before. The Sydney Sweeney stuff was all just garbage. It was, the idea that this was a dog whistle for one group or another. They just caught the denim trend and they rode it absolutely into the beach. On that conference call, they came out and said, you know what, we were sold out of this Sydney Sweeney stuff before the end of back to school. So we couldn't stay in stock on it. It was all gone. The business at American Eagle was absolutely, probably the lower end, just because they weren't able to execute on that. But if you have a good trailing trend working for you in American Eagle, they managed to blow out their earnings. Better than expected was good enough. Now what's Miss Unique is disagreeing with 75% of what I'm saying. That hurts. What's this comment section being mean?
75%. Hey, one out of four ain't bad, I suppose.
I'm having a good year. It's just hurtful. Don't use words that hurt. I mean, I'm flesh and blood. If you cut me, do I not bleed, Spencer? Of course I do. My goodness.
No. All right. Well, if you want to address the chat, what is your take on how tariffs impacted everyone?
Less than people thought. And less than the doomsday scenario. That in retrospect, and even at the time, if you had the Yarbles or any liquidity, once January rolled around, and again, we've talked about it before, once the White House became serious about the tariffs, that got really bad. And the threatened tariffs were horrendous for a lot of these companies, but they were able to mitigate it. By mitigating it, that meant that they ground out some of the profits from their suppliers. They charged a little more where available. Gap raised prices on denim because, again, nothing like a demand tailwind to give you that pricing power. So they took fewer markdowns on denim. Didn't have to do it. Denim's a classic category where when it's not hot, you have to mark it down quite a bit. And that's really what has kind of defined this year is when they talk about the customers being choosier this year or more choice conscious. I don't, there's all kinds of terrible words that companies make up, but that just basically means they're willing to pay really any price. The economy just isn't that bad. It's been apparently a hot take that I've been saying over and over again that the consumer's fine, as though that is making this incredibly bullish call. By fine, I mean most people who have jobs, they're like, we'll buy Christmas presents this year. We're not canceling Christmas. Lego is selling a lot of toys. That's a sign that Christmas is fine. But another sign is that, products people want, they're willing to pay any price for it. They're willing to wait in line for it. There were lines outside the Lego store. There were lines to get into some of the American Eagle type stores, which is kind of unprecedented, kind of incredible. You also saw that at the affordable luxury at Aritzia, that little Canadian operator that I talk about endlessly, that people have a hard time trading. But you know what? It's been a tremendous story all year long, 28% comps. You don't see affordable luxury, you don't see luxury of any sort doing that well in a really weak economy. And so for all the storm and drying, all the controversy and everything, between the delays in the implementation of tariffs and the companies themselves being able to pass on some of those price gains, the margins weren't very bad. And that actually made the retailers really cheap. And so you ended up with people pricing in these huge margin hits that never really came to pass. They haven't come to pass yet. And the possibility of refunds hanging out there makes these companies kind of still a value. I mean, I hate to, we've had a huge run in something like the Gap, but it's still mid-teens earnings. When that company peaks, you're usually closer to around 25, 30.
I've always just found it super difficult to extrapolate a trend or make a judgment on like the health of the consumer based on what you see, or because we all live in our own little bubbles. Now, someone like Jeff sees more than most because he goes to stores every day for fun, but like it's so specific and hyper local. It's like the housing market. It's so hyper local. Depends on the store and the location and the time of day, and it's kind of impossible to make a judgment or like whatever your friends are doing or not doing or spending or not spending. It's just so hard to make a judgment on like.
And the tariffs added a layer of complexity to that this year. I'm seeing the furniture stores come up. They got hammered. It's the clothing manufacturers for the most part were able to work the way around it. The furniture companies that August we're going to raise the price of furniture, which is still made a lot of it in China, not very much of it in the States. That just hammered Williams-Sonoma. Williams-Sonoma has beaten their estimates like just with a stump for freaking 4 quarters in a row. The stock's done absolutely nothing. Restoration Hardware, I just pulled up the chart. For all of Gary's craziness, and again, I would encourage people who are in the mood and maybe looking to do some hallucinogenics around the holiday season to just tune into that call and hope that Gary's going to have a party time with you. He's the one who came out and the stock fell 25% on Liberation Day. They reported on Liberation Day and he listened to it. He said he was listening to the call in his car. He showed up late for the conference call. And he's like, no, I realize our stock isn't doing well, with these Liberation Day news. And someone whispered in his ear, it's down 25%. And he said, "Oh shit!"
Dude, I love that. I love
it. Was beautiful.
Yeah, that's great.
Yeah. It was just like he locks the filter off and he goes. Now they're trying to reel him in. His last couple of calls, we speak. Someone's in his ear telling him that maybe he shouldn't say stuff like that. I was completely there for it. I have no interest in Restoration Hardware calls unless Gary's going unfiltered because he's giving you insights. He's kind of entertaining. It's kind of crazy. I like to go to the beach and just hang out.
Wait, remind us. This is Thursday after the close. Is that right?
That's Thursday after the close. Yeah.
Okay. All right.
And Jeff, Hasbro. I want to just mention them. I see it come up in the chat. They look good. I think toys are going to be good this year. I think you're going to see stuff that doesn't happen in a bad Christmas. Hasbro doesn't do well without a bad Christmas or without people thinking it's going to be a bad Christmas. So they're going to do fine. They're going to do great. I think that where you can find value in some of these beaten down segments, these sectors that are betting on just Christmas not happening. Spoiler, Christmas is going to happen. We've already spent more than we do normally. It was the biggest Black Friday ever. We're fine. America's fine.
That's so funny because for all those years, it was like nobody buys toys. Everybody buys iPads. But
and everything new, old is new again, man. It's toys are nice. People like building Legos. Did you see the lines on Lego stores? It's not just dorks. You're kind of a younger guy. You probably like Legos. Now you have a kid. You're never going to build Legos again. You don't have time for hobbies. But eventually you'll start doing Legos with your kids, and it's horribly disheartening because I remember putting Harry Potter stuff together with my kids, and then they start breaking them, and it's like. You're using my toy. Stop playing with the thing I built you and respect it as the art that it is. But anyway, it's fun stuff.
Jeff, before we let you go, I wanted to ask you about your meeting today. So part of what I think what makes you interesting is that you've built this huge network, right? Over your career of contacts, sources, spies, whatever you want to call them, people who just tell you things, whether you ask them to or not. I think, right? Some people just.
I get some unsolicited advice. I get a lot of thoughts. I get a lot of people that tell me about store visits they had. Some of them are it's the guy at the Cheesecake Factory was an asshole to me. Can you call them or something? And it's like, I can't really help. But a lot of them are just, there's a little subculture of folks that like to try to pick through the refuse of the chains that have been left behind. And sometimes you can find, it's where you find your higher risk, higher reward type of stocks. If you dig through them a little bit, you kind of keep your eye on the consumer and know a little bit more. And so it's a little sewing circle, a little gossip, but it's unique to the consumer space. And it's something we're just going to try to share with the people and give them some insights into how we go about finding.
Right. So you started doing these meetings for your members. The first one is going to be today, but it's going to be for everyone, right? So
we're going to open it up for everyone. Yeah, it's not something that, it's a club, and rule number one of the club is you don't kind of expose everybody. This isn't something we're going to do every week for everybody, but members are part of the club, and so we're going to give them some of the inside information.
This is going to be a monthly. This is going to be a monthly meeting. The first one of which is today, and today and today only. It's available to everyone, like I said. So the link is on the screen via a QR code in the top corner that way.
There we go. Right there.
And then the link is in the chat as well. This is when 4 o'clock today, Eastern, right?
Yep, 4 o'clock Eastern today. I'm gonna stay up late. Normally, that's kind of the end of my workday, since I do wake up at 3 in the morning. But right. we're gonna stay a little late. We're gonna have a little fun. We're gonna talk. We'll take questions. We'll have a good time.
Wait, so what's the point here? Is the point to just have you kind of like share like your intel, or are you gonna like talk about like one stock or like a bunch of stocks?
Today we're going to talk about one of my favorite picks, and that'll kind of illustrate the point. It's something that a name that we've alluded to in the past, but I'm going to tell people why I think it can be easily a 10 bagger, why it has a huge amount of upside potential, and above all, most 10 baggers, the potential they tend to have a gravitational pull towards zero. Some of them aren't going to zero. And so if you give me something with 10%, tenfold upside and, no risk of zero, that's a good pick for me. And that's kind of the type of information that you try to call out there, and the type of thing that we sit around in our little sewing circle and talk about the big shots we can make. We've had a great year in the portfolio, plus not a ton of trades. We're not incurring a bunch of taxes. We're up 20%, give or take 20 something percent. So we're crushing any consumer indice. But the way you get rich in this business is you find a lotto ticket every once in a while. Only our lotto tickets pay off at a much higher rate than actual lotto tickets.
Before we go, can we bring up slide 3 real fast? I just wanted to just acknowledge the big guns in the room here. And I said this the other day as well, but if the worst thing you can say is that your stock is not really going down that much, if that's the worst thing you can say, that's pretty damn awesome. So I say this as an Amazon and a Costco shareholder. It's been an underwhelming year for both. But if underwhelming is down 2% for Costco, I'll take that. Granted, it looks worse on a relative basis, but still, it had a huge run before this. So what more can you ask for? That's sort of my take here. That's my glass half full take.
They've been two monster stocks over time. You really have to back up and take kind of a 15-year chart look at these things, a 10-year chart. I mean, it's any stock that Charlie Munger liked. Charlie's been dead for 3 years and is one of the all-time great stock pickers. It's not going to be a straight shot. They don't go upward to the right at 60%. It's gonna go higher and then chop for a little bit. They're growing into their valuations. I think both those stocks work next year, but of course I thought they both work this year, and so you need a little bit more volatility. But they're coiling like springs, just coiling. We'll see. I don't think either one of these stories is broken. I think they both do well next year.
Good. I love to hear it. As a customer and a shareholder. All right, Jeff, we'll see you today at 4 o'clock for the meeting. It's not going to be on YouTube, or if we do put it on YouTube, I suppose it'll be after the fact. We probably won't do it though. So it'll be on the site, stockmarkettv.com. Again, normally for members only. Today, for everyone, use the link on the QR code on the screen. Use the link in the chat to register. You'll get the watch link sent automatically your way. And Jeff, we will see you today at the close.
All right, man. We'll see you then.
All right. What do we have going? Oh, wow. It is 9:28. I did not realize how late it was. Time flies. I could talk to Jeff like all day. Seriously, I find his, first off, his coverage universe is interesting. It's the consumer, which, we all kind of care. We all identify as one. We all are one. So, I'm interested in what people are. I'm much more interested in consumer stocks than I am in like chip stocks. No offense to like Nvidia. I just don't care. I'm not shopping for Nvidia chips every other week. You know what I mean? But I'm buying stuff, so I care. And he's forgotten more about like retail than like you or I could even ever remember.
He's the best in the business.
Yeah,
it's the truth. I don't have time. I wish I had time to read more things.
God, me too.
I make time to read Jeff's stuff because it's just that good.
And he's kind of like it's the best of all worlds because he's technical. He looks at the charts, but he's also fundamental. But he's not married to fundamentals. He looks at both sides. He looks at sentiment.
Yeah, he's a fusion guy.
He looks, the fusion analysis. He looks at everything. We'll have Phil hop in a second. Before we do, I just wanted to outline the day. Strazza is going to hop in a few, and he'll get ready for the open bar. The open bar is open again, Steve. It was closed last week because you were doing some traveling, but the open bar is open. So today at 9:45, if you're watching us on YouTube, this stream will end and redirect you automatically to Strazza's show. Again, like I said, 9:45. Kenny goes live every Monday through Wednesday on this channel, Stock Market TV, at 11 o'clock. So when Strazza's show ends, his stream will automatically redirect to Kenny's stream at 11. Amazing how that works. And then, as I mentioned, Mackie going live at 4 o'clock, not on YouTube, not on Twitter, but on our site, stockmarkettv.com. Okay, Steve, I will let you run, but if you want to hang out for Phil, you're more than welcome to do so because Phil is in the house and I want to bring him out.
Do it.
The chat? No? Okay. Capiche. What's up?
What's up, kid?
How we doing?
How you doing? Let my dog in.
Oh, where'd he go?
Come on in, puppy. Come on, coming in.
He wants everyone to see how beautifully organized his bookshelf is. Nice.
You know what? I redid my office. I'm going to get a fancy light too. I redid my office.
I'm looking at the books. Nice. Liar's Poker, some classics. You got some classics up there.
My wife was like, "It's a mess back there, honey. You have to get that under order. You have to get it together." So I did. Like she helped, great. And I got it together. And now I have. However, though, I will tell you this: that I have books on the floor back here because I got my shit together on the shelf. But now I have extra books that I don't know what to do with. I have a shelf over there. I'm gonna have to do a little bit more reorganizing. But anyway, what's up, fellas?
Not much, man. Happy Tuesday.
Yeah. Happy Tuesday. Listen, I got something for you guys today. I got something for the audience today, and I think this is a really important one, and I think it's a key one going into the new year. And that is this. And it was perfect that Jeff Mackey was just on because he defines this. When you know who you are in your life, it makes the world a very simple place. Okay? It makes the world, it goes from complicated to simplicity. And when you know who you are as a market participant, a trader, investor, whatever you are, when you know who you are, when you know what you're doing there, it makes market participation simple because you know what you're doing. If you sit around all day, and so this is something to think about into the new year. Do you know who you are as a trader? Do you know who you are as an investor? Do you know what you're doing here? Or are you just like looking for whatever? Like, oh, I heard Google has a good chart, so I'm going to try that. Or NVIDIA looks like it's breaking down, so I'm going to sell, even though 3 months ago I bought because I wanted to hold it for the next 10 years for my children. do you know who you are? Now, I know this about
What are
you.
your goals too?
What are your goals and who are you?
Yeah.
So I ask you, Steve, I know I've watched you develop. I've watched you evolve.
Yeah.
As a trader over the years, and you're killing now. I mean, breakout multiplier is ridiculous, by the way. I've been eavesdropping on you, and it's not my strategy, but I've been eavesdropping.
Yeah.
And then this other thing that you got working on is a
yeah.
joke. And by the way, that I'm not going to get into specifics about it, but by the way, that when I was running a hedge fund, it was a similar strategy that we were employing. So I know a little bit about that one. That one, I'm really going to have my eyes on you. But you have evolved to know who you are.
Yeah.
So going into 2026, if you're sitting here and watching this, and you're just looking for trade ideas, and you're kind of floating in the wind, and you hear Mackie talking about this or that, and you hear Steve talking about this or that, and you see JC show, or you're on Twitter and you see a chart, and you're being swayed by those things, 2026 could be the year that you take command, where you identify who you are, where you figure it out, and you begin to interact with the market, to take positions based on who you are and where you're coming from. So it's coming out of you rather than just coming through the wind. So Steve, talk to me a little bit about your evolution in that regard, because I've watched it happen, so I know.
I'll take a shot at this because, Phil, I remember not being that person, not long ago, throwing shit at the wall, trying to do 10 different things, trading 5, 6, 7 different strategies at the same time, completely unorganized. Your brain is all over the place, right? Anxiety and stress are fucking destroying you. And you're in front of your screens all day because you think that's going to make you better. For me, I think it's confidence. Finding out who you are, knowing your goals, knowing your process gives you the confidence to succeed in the market. If you're not confident and you're wavering at all about your process, that fucks things up. So for me, I spent earlier in my career, I read everything I could. I tried to find out what all the greatest traders were doing, tried to learn their systems, right? I spent all my time absorbing a ton of other information. Now, today, I almost feel bad. I don't read anybody's shit. I don't want my brain to be clouded by anybody's shit. I don't want to be talked out of what I'm doing, and I know that is right. So I have the confidence now to ignore everything else and just do my thing, and that is a liberating feeling. I think it's made all the difference for me.
And so okay, so you mentioned two things, right? You mentioned your methodology, knowing what you're doing, and ignoring a lot where you were. By the way, that process of absorbing the masters, that is a very artistic process.
Yeah.
Right? I mean, that's what if you're an art major, right, and you're learning to paint and you go to an art school, what's the first thing that you do? They put up a Monet, or they put up a Picasso, and you learn, cubism or pointillism or impressionism. You learn how to paint the way the masters paint. So if you're sitting around and you're reading Market Wizards and you're early on in your career, early on in your tenure of trading, that's fine. And that sounds like what you did. But so here's my question for you now. So you mentioned two things. You mentioned your methodology and you mentioned self-confidence. And so is it a chicken egg thing? Like, how did that evolve? How did those two things in orchestration with each other evolve over time?
Once the system started working, I kept running it and started cutting out the other things I was doing. Now I really just do two things. I run a long-term account and I run a short-term account. Right. So the way I look at it is I'm doing two strategies throughout the day. And I really only have to focus on one day in and day out, which is the short-term one. The long-term one, you deal with every couple of days or whatever. So I think as the system started working for me many years ago, that gave me the confidence to stop doing other things. And then everything just becomes very clean and clear. You're on a path, right? And you know exactly what you're doing. And it's much easier to not sway or be wavered by anything else once you have the confidence in what you're doing. Now, looking back all these years, I didn't even think twice about it. In the past, Phil, I used to get FOMO. If I wasn't reading something, or if somebody else who I thought was smarter than me was on the other side of my trade, it would spook me out of it. I don't even want to know. I don't really care what other people are doing. I'm just doing my own thing. It's just me in the market here every day. And And yeah, there's a peace of mind that's come with that for sure.
Fantastic.
I went through a big learning phase, Phil, for many years, 5 years. All I was doing was learning. And then the last 10 years, I went through just a big doing phase where I said, that's enough learning. Now I got to apply it. And that takes time, right? Once you have that like body of knowledge to get out there and do it, then you got to go like fall on your face a couple times, like learn how to ride a bike, but you have the foundation. But then it still takes a couple years of application because that's a lot harder. Like it's like you have theory and then application. So the learning is great, but that's just theory. Then can you go out in the market and actually do it, deal with all the emotions that are going to come? That's like a second level of kind of learning how to trade. So I think you do need those two phases in your trading or investing development.
So you mentioned one other thing here, and we've brought up a bunch of significant facets, right? Knowing who you are and what you're doing, but you also brought up one other thing here, and self-confidence and having a methodology. So we're bringing up multiple variables here. But you mentioned one other thing that I think is very significant, and that is time in front of the screens. Just experience, days, weeks, months. You were talking in years.
Yeah. Yep. My parents were laughing. They were here this weekend. Like, you remember you used to be on your computer till 2 o'clock in the morning. I'd wake up in the middle of the night, be on my computer. They're like, that was crazy. Like, yeah, but I'm glad I did it. I'm glad I did it. I needed it at the time. Today, I would tell you that's fucking nuts. I'm not going to be on my computer staring at these screens at midnight, 2 a.m. That's just bad for me. That's not what I need right now. But there was a time in my life where I was on a mission, Phil. I was pissed off too.
Can you turn it off? Can you get away? Can you turn it off? 4:30, 4 o'clock?
Yeah.
You turn it off and you go gallivanting?
I do. I'll put a stop to look. We're always kind of like answering Slacks and getting emails out, but like I walk away from the trading life 4:30, 5 o'clock every day.
Fantastic. I mean,
it's nice.
This is a great interview. So
you can have a nice life doing that, you know?
So I only want to add one other element to this that I don't know if we really covered, although I could probably ask you about if we have a couple more minutes, and that is that gravitating towards something that is you.
Yeah.
Like different personalities have different trading styles. And you're going to read a book, you might read a Market Wizards book and you find somebody in there that resonates with you and you begin copying them the same way the first year art student is, painting the Picasso that's sitting in front of him, just trying to recreate it. But over time, that needs to become individualized. Individuated is kind of the fancy term, but individualized, the way we can understand it, where you need to make it your own and have that be a part. So do you think that your approach to the market is something that vibes with your personality?
100%. I stole 5 to 10 things that I really believed in that really spoke to me. Shout out Brian Shannon, shout out JC, shout out Sean, right? Some of these classical books, John Murphy, right? And then I took it all, and it took a long time, but I blended them together, literally stole stuff from some of the greatest traders and investors in the world over the years. And then I blended it into my own thing that it was uniquely mine and really worked for me and my risk tolerance, my personality. But it, takes some time and some kind of, I guess, process of elimination, a little guess and check along the way. And what you end up doing is you start with a big pile of shit, and then you kind of sculpt it into something nice over time.
Does it matter that other traders or investors have different approaches to the market that work, that don't jive with yours?
Now I could pretty much care less. That used to bother me early on. Now I'm maybe overconfident about it. I think I make more money than anybody in a bull market. Once you go a couple 100% cycle after cycle after cycle, you stop giving a shit what other people are doing.
So God bless them if somebody else figures out a different way to make money that jives with their personality as opposed to what correlates to your personality.
This took me 10 years. I'm here now. I'm not changing. I'm almost 40 years old. This is just what I'm going to do. But man, 10 years ago, if you asked me, was still figuring it out. And that was a long and, stressful journey, I would say.
But unfortunately, you can't fast forward. I don't think. Maybe you can feel you can't fast forward that process. You have to go through it at the pace you're going through it. Right.
I think a lot of people would have given up and quit on what I was trying to do a couple of times. I fucked up over and over and over again, and you just have to pick yourself back up, learn from it, do better the next time. And finally, I feel like, Phil, I just kept trying for so long that I eventually figured something out. But
You know,
a lot of
you
it had to do with
reminded me.
not quitting.
You reminded me again of the artist development process, and that is that becoming a great artist takes a lot of time and a lot of pain and a lot of poverty. And there are many would-be artists that give up and that go, oh, you know what? I'm going to go be an accountant because that's going to pay the bills. And you know what? That person was never meant to be an artist in the first place. They never had that thing inside them that was like, I'm willing to risk everything. I'm willing to give it all up, no matter how long it takes, and that's fine. There's nothing wrong with being an accountant. It's a great living. If you're a mathy person, it's a great, there's zero wrong with it. It's just a different thing. So you went through like this, you know, the Death Valley, and you were like, I'm sticking with it. That was a critical moment in your development because it was saying, you were saying to yourself, this is the most important, this is what I am. Again, it was a self-defining process.
And I had, at this time, I'm thinking back, man, it's probably more than 10 years ago now, loved ones, people who knew me really well, mentors saying to me, dude, stop trading. Just stop doing what you're doing. It's not good for you. It's not working. You're fucking losing all your money. Just stop. I went back. I started working with my dad, doing tax returns. Said, all right, I'll be a tax accountant. I'll do this. He laughs at me. He said, we would stack up the files on your desk, right? And you wouldn't get through them. You would do like 1 or 2 tax returns a day because you were sitting there still trying to figure out trading. So like I tried to go be an accountant and work with my dad. He was like, you suck at this. I was like, I know. So back to trading. But yeah, you know, been through it all.
Great wisdom, brother. Thank you so much for being so open and sharing.
I boomeranged. I hate the Big Four. I needed money. I needed to pay my mortgage. I went back, worked a stint in the Big Four. I did the things I needed to do along the way. But I kept going back to trading. I was so passionate about it, it just kept pulling me back. And I knew it's where I needed to be, and I had to figure it out. So I was a man on a mission until I got there.
Okay, so let's wrap this up because I know you got to go. But 2026 people watching here, some of them are not even in Death Valley yet. Some of them are right in the dead center in Death Valley with no water. And some people are coming out of Death Valley and they're really discovering, I would really, experience is critical. Having a plan that suits who you are and sticking to that and cultivating it. Yes, you could pull from other sources, but cultivating that approach to the market and not just floating in the wind, identifying that and sticking with that over the course of the year and really coming into your own in 2026 as a trader or investor or whatever you want to call it, where you make it your own, where you make it something that you do that is a part of you and that comes out of yourself, not just, hey, what's the latest, greatest idea from, Tom Lee or, whoever the latest pundit is. That's what we're talking about. 2026, you still got 21 days, 22 days to think through this, to plan it, maybe write something down. Maybe it's just one sentence. Hey, this is my goal. This is what I'm going to do. These are the trades I'm going to take. These are the trades I'm not going to take. This is what I'm going to be. These are the factors I'm going to be looking at. These are the factors, importantly, to what Strazza said, that I'm going to be ignoring over the course of the year. Okay. Thank you, guys. Spence, thanks for having me on.
Thank you,
Straz,
Phil.
Thank you for being so open to sharing impromptu.
If there's one thing I'll say for people, if this makes sense and you say, oh God, I feel that, what Straz is talking about. If you have this feeling in your bones, like I did, that you just need to be in the market and that's where you got to be, and you have that passion for it, it's not easy. It does take work, and it just takes time. It takes time to figure it out. So don't quit. Just keep going and you'll get there. But for me, that's really what it was. Just not quitting. Just refuse to lose. And it finally worked out.
All right. On that note, let's get out of here. Strazza's going live at the open bar. We'll start in a few minutes. Give him a minute to get a new cup of coffee or whatever. Thank you for watching. Thank you, Phil, Jeff, Kenny. We'll be back tomorrow. Same time, same place, as always. Go make some money, all right?
Adios.
I can't take no loss. I don't even know what it costs. I hit the